Hello, welcome everyone to today's webinar on Money Matters and financial and tax basics for sole proprietors. My name is Nisha Nehru, and I'll be guiding you through the essentials of financial management and tax considerations for sole proprietors. By the end of this session, you'll have a clear understanding of how to organize your finances, track income and expenses, and ensure compliance. So first, I would like to talk to you about the courts. Like if you're in a financial tax consideration, you're trying to file your taxes, if you ever encounter the CRA, who will indicate that you have now been in a non-tax compliance, your matter will usually end up in federal court. So let me explain the difference between these two levels of court. There's a Superior Court of Ontario, which is a provincial court, and then there is the federal courts, which deals with federal matters and federal regulatory requirements. If you have considered any concerns about which level of court you have to deal with, make sure that you actually consult a lawyer, because different regulatory and statutory considerations require different levels of court, as well as different types of court. And this is an important factor because whatever case law I am going to be discussing today will involve the federal court, because it involves Income Tax Act, which falls under the federal jurisdiction, which will be the main court dealing with any kind of tax regulatory requirements. So now let's jump into our seminar. Understanding sole proprietorship. A business structure owned and run by one individual is what a sole proprietorship is. There are no legal distinctions between the owner and the business. Remember that the sole proprietor has full control and responsibility over their business and any tax requirements, as well as filing requirements. The profits and losses reported on the personal tax return will belong to the sole proprietor. So if you're the sole proprietor, you will be filing personal tax returns. And before diving into the financial management, let's clarify that the sole proprietor is the simplest business structure, where an individual owns and operates the business while they have full control. So in this aspect, I would like to talk to you about David Robinson and the Queen, which is a case from 2019. A decision was made in this matter regarding whether the individual was a sole proprietor or they were running a business for a commercial activity. The important factors to consider in this case, I will provide you with a summary first. David Robinson was a former lawyer who was interested in becoming a sole proprietor, but his investments into technology funding and other innovations were considered to be different from a sole proprietor because of the factors that he never claimed business expenses during the time where the case was being dealt with. He was the individual who assisted in creating business plans, who assisted in various aspects of innovation. However, he never had any funds come out of the business that he conducted, which the court was a little bit hesitant to indicate this as a sole proprietorship, because it was seen as more of a Mr. Robinson had created an investment in these different patent projects that he had been collaborating with innovative technologies and gaining investments through them. and which this allowed him to be able to have the investment, but he considered it as sole proprietorship, and the court ruled it as a commercial activity, yet it was a uh, investment in property rather than an investment as a sole proprietor who's conducting business. There are two different distinctions. You will have to read the case law to be able to understand further the details of how these distinctions were made by the court. As Justice Siobhan Man- Mangum, I'm sorry, I pronounced the justice's wrong name wrong. I try to do my best, but sometimes they escape me, the pronunciations I'm saying. But what I would like to talk to you about in this case is um, during the relevant years, under paragraph 27, Justice Monaghan indicates that during the relevant years, Mr. Robinson undertook a number of initiatives which he described as related to efforts to commercialize innovation. However, these were seen as investment capitals, developing their intellectual property portfolio, preparing a business plan, applying for government funding, and meeting with other parties to seek their sponsorship of a field trial and demonstration trial. These were considered as investments, but he never actually made a profit on this. In this instance, it became a property investment. So this is why the court indicates it as an activity on investment property rather than a sole proprietorship. However, this case is relevant because in this case, Mr. Robinson did not report several different deductions, or he did not report several funds that were going through his account. And so his activities were not generating profit, meaning they were not a valid business, but the CRA also accused him of underreporting income, identified unexplained bank deposits, which is relevant because we need to make sure that our taxes are always reported appropriately. Robinson argued that these were personal funds, gifts, and reimbursements from his wife. However, there were aspects of this case where Mr. Robinson's funds were not actually reported and no proper documentation was provided to the CRA, which did cause a bit of difficulty for him in the long run, since CRA has the right to reassess any kind of funds that are being transmitted into your account and not being reported in an accurate manner. So, by doing so, in paragraph 25 of Robinson and the Queen, the judge states, while the deductions of expenses is dependent on the source of income, the existence of the source of income is not by itself sufficient to support deduction. So make sure that you are actually reporting the correct source of income and that the deduction is actually related to the source of income and not separate and apart from the deductions. So the court did not allow all expense deductions as he failed to prove that they were directly linked to a profit-driven business. Some of the unexplained deposits are still counted as income. So make sure that you have been labeling these types of any kind of information, any kind of expenses, label them correctly in your business structure. So we're going to go to the next slide. Sole proprietors must show clear intent to generate revenue from their business. If a business has no contracts, no clients, and no income, it may not qualify as a valid source of income for tax purposes. However, remember that commercial activity can still be constituted as investment income within the property investments. So in this aspect, you must remember the distinction between being a sole proprietor who's conducting business and a individual who is investing in property and obtaining income from a property. These are two different distinctions that we need to make sure we do in our business in order for tax purposes. Avoid penalties by ensuring all income and expenses are properly accounted for, because the CRA does scrutinize your and can reassess your tax income from previous years if they find that there are some unreported investments that have come in, and they can look through your bank accounts to determine any kind of investments that have not been reported if they do a reassessment of your business. Financial management basics. Separate business and personal Separate business and personal finances. So that means make sure that you are docketing any expenses that you're incurring, and make sure that you're also docketing any investments that are coming into investments or even funds that are coming into your bank accounts through proper documenting QuickBooks or a Wave or streamline your financial management. So make sure that these are recorded appropriately. If you have an investment that came in, record it as per this investment from this property, or a this is a payment for services rendered. These are things that you should be listing so that in case you are audited or evaluated later or reassessed in the future by CRA, you will be able to account for the details of these funds, and you will be able to account for the expenses that are deducted on these funds. These are essentials for any business owner, including investment individuals who are doing investments but are considering themselves as sole proprietors. In this aspect, make sure the distinction of sole proprietor and property investment is identified, because your sole proprietor will have services that you will be getting paid for, whereas property investment per individual, you'll only be getting returns on the property. Okay, so let's go to the next slide. Income tracking and revenue management. Maintain accurate invoices and records. Use bookkeeping tools, spreadsheets, and other resources as much as you possibly can. Even hiring a bookkeeper is a good way to actually manage your bookkeeping if you're not able to do it yourself. I know businesses, we tend to get very busy, and we don't have the time to look through our records or look through our expenses. If it does become a point where you do have a lot on your plate, always try to see if you can hire someone, even on a temporary basis, to be able to review your books, to be able to review the expenses, and make sure the connection is there, that it relates to the business. Okay. And now we're going to managing business expenses. To maximize tax deductions and maintain financial clarity, categorize your expenses correctly. Keep records of business-related costs, such as office supplies, marketing, travel expenses, other expenses that you may incur, even like if you go for an event. Those are some expenses that might be related depending on what event you're going to, and if it's a networking event to be able to bring in more business. There are ways to alleviate your expenses with the revenue you're making, but make sure you consult the Canada Revenue Agency. Make sure you consult an accountant. These are individuals who can assist you in various ways of understanding what expenses that are appropriate for your business, especially depending on the kind of business you are running. because each industry has a different type of requirements and expenses. So we must make sure that our industry has the appropriate um, catalogs and categories that we have actually put them under in order for the accountant, or if you're doing your own accounts, please make sure you review the Canada Revenue Agency to appropriately get that information into your filing materials. So let's go to record keeping. Sorry. So I am going to be talking about understanding tax obligations. The CRA website has particular information about how to understand the CRA obligations. So you can always contact them directly, which I've done on several occasions. They are very helpful, but make sure you review the materials on their website or speak to an accountant prior to contacting them, because you want to be as precise as you can in order to get the appropriate information. As if you are a sole proprietor and I don't have a business registration, how do I do my taxes? You can ask them, how do I do self tax return, personal tax returns? And they will actually give you the guidance that you need for you to be able to file your taxes appropriately. They'll give you the exact forms that are necessary if appropriate. Okay. If there are any questions relating to this, make sure to contact an accountant. And if you don't know, if you're in a situation where you've already got a matter against you and a reassessment has been made, make sure you talk to a tax litigation lawyer. They will be experts in income tax law, and they will know exactly what kind of requirement will be needed and how to proceed in these cases. And now I would like to talk to you about the case of Stewart and the Queen. Brian Stewart is an experienced real estate investor. He has been a real estate agent for quite a number of years, and he decided to invest in a real estate purchase of 4 properties, which he had not been using as a personal on a personal basis or for his own benefit. Instead, he had been renting these properties out and obtaining investments from the properties. However, these properties were highly leveraged, and Stewart only paid $1,000 in cash per unit. He was promised rental income but faced negative cash flow. So there was a lot of deductions and expenses that occurred during the process of purchasing these investment properties, as well as continuing revenue within these investment properties. He claimed rental loss as tax deductions, which the Canada Revenue Agency disallowed at the time due to the fact that they indicated he had no reasonable expectation of profit, because they asserted that this was this was for his own personal benefits, which the court in Stewart versus Queen indicates that this is not a personal revenue, and they summarize that a taxpayer has a source of income from a particular activity is determined by considering whether the taxpayer intends to carry on the activity for profit. So you have to make sure that the activity that you're, like, if you're investing in a property, that it is a commercial activity, that it is meant for the purpose of gaining an investment, and that you will not have any sort of personal gain in that investment property, which constituted in the court's opinion that it is a commercial activity. As a result, that the appellant in this matter satisfied the test for the source of income and is entitled to deduct his rental losses. Section 20 sub 1, sub C, sub I of the Income Tax Act permitted the deduction of the interest on the borrowed money. So there are ways to levy your deductions within the investment, but it has to be constituted as a commercial activity. This means that the the property or any kind of subsidized activity should be for commercial use only and not for personal gain or personal benefits. And they emphasize on paragraph 53 that the pursuit of profit source test will only require an analysis in situations where there is a personal or hobby element to the activity in question. So remember that if you're actually doing something on a personal hobby basis or uh, like an element of hobby activity, then it won't be constituted as a investment, or it won't be taken in as you cannot use it as a tax deduction. We're going to go to the next slide. So tax deductions for sole proprietors. You have various options for tax deductions. As I indicated earlier, speak to your accountant, speak to your bookkeeper. They will have the relevant information for you to be able to properly deduct expenses within your business. You can use business mileage, traveling expenses, depending on if your business requires sales and you're traveling in various directions, and or you are specifically doing it for a networking purposes. And there are specific requirements for each of these areas. So make sure to understand them properly before you actually accept them as a deduction or expense. Office supplies and equipments are definitely a part of these expenses, which you do not have to explain. However, certain aspects you will have to explain, like professional services. In the case of in the case of Davidson Rob, my apologies, I just need to, David Robinson, my apologies. In the case of David Robinson and the Queen, the court determined that the lawyer cannot expense his fees to the Law Society because it was not a part of the investment business that he was conducting. So in this aspect, remember to always check before you actually use the expenses as an expense or as a deduction in your tax returns. So that is an appropriate example of how, if it is related to the business, then it can be expense. But if it is not related, you cannot use it as a deduction. Next. So keeping proper bookkeeping is a important factor in your business to remember at all times. Bookkeeping practices include making sure your accounts are labeled, your invoices are in categorized, you have your receipts for all of the invoices, and you also have provided these receipts to individuals, as well as keeping your expenses separately and store tax documents securely. Any other aspect of your business, make sure you document every aspect of the expenses, any funds that are going out. If you're using your bank accounts, make sure you do a monthly inventory about all of the expenses that have gone out and all the expenses that have come in, so that you can actually use them for tax purposes. Financial planning. So financial planning ensures long-term stability. Set clear revenue budgets for expenses and taxes, and invest in business growth. So if you're investing in marketing and other expenses, make sure to list them, because that is considered a part of the business and will be able to be used as deductions, and it will allow you to have create a proper revenue stream as well. Don't forget about retirement options. These are important. We always need to be able to make sure we have RRSPs, RESP, LIRA accounts, because they will actually allow us to deduct taxes for those expenses that we are putting away for our retirement, as well as health insurance and any other kind of expenses. If you have employees, you will be paying other expenses for employees as well. So these are things that can be used as forms of deduction as well. And to wrap up, I would like you to remember that new businesses always are difficult. We will always find it difficult to talk about taxes and difficult to be able to deal with taxes. However, keeping business finances separate and tracking income and expenses carefully will be essential for your business tax purposes and for CRA to, if they require to audit you, you won't have any further issues once you've done those. And feel free to reach out to me to inquire about any other important factors. I will be like, when I'm conducting research, I do provide information on CRA requirements as well as other related requirements for your business. Also, make sure to reach out to an accountant, because they are the ones who deal with all the taxes. And this is a tax season right now, so I know all the accountants are quite busy. Give them a few months, maybe in June, to if you need to inquire about specific things. But the Canada Revenue Agency also has information on their website, which is valuable information because it actually gives you a thorough detail about the type of tax implications, as well as what type of requirements are required for individuals paying taxes, including sole proprietors. These are things always to keep in mind when you're conducting your business. We, as sole proprietors, will always have to keep on top of our books, because they are essential for long-term growth. And thank you so much for listening in on our webinar today. We hope to bring you more information and guidance next week. Please stay tuned for further business information. Thank you.